Hey everyone, so I would like to share today the results of week 11. In this week, I took 5 trades. There were 3 winners and 2 losers, and in the end, I ended with a plus 2.5 R for this week. So let's get right down to it. I traded 3 time frames this week: the daily time frame, the weekly, and the H4. So this was quite a lot of fun, quite a lot of action this week. The first trade that I took was on NCDUSD on the DM30 time frame. That's daily on the higher time frame and M30 on the lower. How the setup was forming on the daily chart. The daily chart had generated an order block on in the premium section of the range. You can see it's an order block, and it's above the equilibrium point, so it's a premium section. That means it's very tentative that price could potentially sell off from this order block, and my objective was to catch a mitigation of this order block on M30 time frame. When the signal came up on Discord, this is how it had set up, where the new day had opened up, price went in back into the order block, the higher time frame order block, and had a strong rejection from there. Now I'll explain in another video how my new lower time frame entry setup is, but you can clearly see that there is a lower time frame, the 30-minute time frame order block there, and then if we wait another candle, we can very clearly see this candle has not completely overlapped with this other candle here. That means there's also a fair value gap. The presence of both of these elements in a setup makes for a very potent order block, a potent breaker here, a bearish breaker, and my intention was to trade the retest of this breaker now and catch my 1.5 R in the trade. And let's see how the price played out. So at this time, when this green candle completed, I set up my limit order here, stop loss over here, and my objective was to get a full 1.5 R target over here. No partials to be taken before that. Price came in, gave me an entry. You can see how it did not break the fair value gap or the order block that I just marked, and then boom, within one candle the trade was completed. Since this was an M30 time frame, within 1 hour I had taken out 1.5 R and closed the entire trade. The trade could have gone in my direction or not, I don't care. My 1.5 R is in my pocket, and I went on to do other things after that. Then so this was the first trade, NCDUSD, which was a win. Then the second trade that I took was CADCHF on the WH1 time frame, and let's see how that went. It was a loss. Let me switch to 1 week and 1H. So when the trade had showed up, this is how the weekly candle had set up. There was a weekly order block over here, which was a pretty potent order block because it was forming in the bottom half of the range, this entire range. And my plan was to basically target this liquidity reference point by taking a bounce from in here. Now, a key mistake that I did in this trade was, as you will see, the setup, the lower time frame setup I was trading was above this equilibrium line. This is a 50% line. we want, remember our key rule is that we want to buy below this equilibrium over here and sell over here. But as you can see, I'll show you right now, as I had created the setup was above equilibrium here. So let me if I sync this in the layout and expand this, not show. Okay, let me do this. Basically I was trying to take an entry here, which you can clearly see is above equilibrium. Is not something you want to do. So nevertheless, when I came to the charts, this is how the setup was, and I could clearly see that there was a lower time frame order block here, there was a lower time frame rejection block here, and as I let the next candle form, there was also a fair value gap. So all the elements of the good lower time frame trade were there, but obviously the key mistake was that it was not in discount. And you can see this is the discount line. This is where the 50% was, and let me synchronize this, get back to our trade setup, and you can clearly see this is where the sensitive line is. This is below this was a trade setup that I should have taken. You can clearly see this setup is in premium, and you don't want to be buying in premium. Nevertheless, price came in, and let's see what happened. So price came in, gave us an entry, and just collapsed from there. The fun part is that price went into discount here. You can clearly see rejected off from there, and then just took off. So the anticipation was right. You can see how the weekly has moved forward. The anticipation on the week was right. We knew what was going to happen, just that my lower time frame execution was incorrect. I was a bit too early in the trade, so that was a loss. So I lost 1 hour on this. Then for the rest of the week, there were only didn't find any setups on the daily time frame or the weekly ones, but a lot of interesting setups had popped up on H4 time frame. So the next setup that I took was on AUDCAD on H4 M15, and I won this setup. So let us see how that played out. Let's go to 4H on higher time frame and 15 on lower time frame. Going back to AUDCAD. So the setup here was on AUDCAD. There was a order block that had formed at the lowest part of the range, which is a very potent section for a bullish order block to be forming, and I was interested in trading this order block, a mitigation of this order block. I knew that there were unmitigated elements over here, but my anticipation was we'll not have to go that far to take out 1.5 hours. So this setup was okay for us. Let's see how this setup was on the lower time frame. On the lower time frame, when we got this setup, this is how the setup had formed. It was price had come down. So after creating this order block on the 4 hour, price had come down and got a strong rejection from here, where you can see that the last red box got broken by a green box. That means a breakup structure here, and this practically took out liquidity over here. So this was also a very concise breaker setup, which are very important in general. So I waited for another candle. When this happened, that meant that this is now an unmitigated order block. You can clearly see this as an unmitigated order block with a fair value gap sitting on top of it. So I created my trading zone, and then I just basically waited patiently. I wanted to get an entry somewhere here and take an exit here with my stop loss over here. So let's see what happened. Price kept on going higher, almost came and gave me an entry, but my entry, because this did not go far enough because of the spread, my entry was not triggered, and I still was waiting for an entry, which eventually happened over here. And then I think with the next candle I had an exit of 1.5 hour. So this is where I took out the entire trade. Obviously, in hindsight, I can see that focusing on the 4-hour chart, I mean, this was the low point of the week, and basically just took off from there. It is impossible to predict what's going to unfold. So I did the next best thing that was possible, was take profit, keep it in your pocket, and move on to the next trade. The next trade that I took was USDCAD on H4M15, and it was, for lack of a better term, a stupid loss. Let's see how that played out. Alright, so on H4M15, let me focus on the higher time frame first. When I came in, this is what was going on. This candle was still forming, and it was interacting with this rejection block, and there was a setup occurring here on the lower time frame. Now, the reason I called this as a trade I shouldn't have been taken, call this trade as a stupid trade for the lack of a better word, is because you can clearly see that the order flow is bearish, and my anticipation was to catch a 15-minute lower time frame entry that is going to reverse a 4-hour time frame, which is just bonkers. There was no reason for me to do that. I took a very similar trade, I think on USDCAD last week, with a very similar problem where the trade was just falling, price was just falling, and I was trying to catch it. There was no real reason for me to do that, and I did the same thing here again. So this was a rejection block, and let's see how this played out on the lower time frame. On the lower time frame, let's go to this trade where this had formed, and let me rewind time back. So when I came for the setup, this is what I saw, that there was a breakup structure that had happened after price taking out liquidity here, and this all is happening over here, and I can let me show you that. So if I just plot a line here and synchronize it, you can see it is forming over here. It was below this rejection block, so there were hints that this rejection block might not hold, but nevertheless I did not take that hint, and there was a fair value gap sitting in this setup. There was a lower time frame order block. This was a very weak setup in hindsight. The displacement caused by this setup is not something that you would like to see in a good setup. It took buyers one, two, three, four, practically 4 to 5 candles to cause a break of structure, which is a lot of time considering it's a 15-minute candle. It took them only 2 candles to take the liquidity and then 4 candles to create a break of structure. So anyways, my intention was to take an entry here within this zone and then take my profit out here. Let's see what happened. Price just came in and just kept on coming in and just kept on coming in, and you can see on the higher time frame, price did not reverse till it came down quite a lot, took this liquidity. So this was just a bad trade, could have been completely avoided, but I took a 0.1 hour loss on this trade. The last trade for the week was EURUSD, again on H4 M15 time frame, and I took a 1.5 hour win on this one. So let's look at EURUSD. And let me see where. Okay, yep. This EURUSD trade was for a fair value gap to be filled. So the trade setup had come over here, where there was a fair value gap. Let me expand and show you. There's a fair value gap here between the 2 candles, and my plan was, so when the trade setup had come in, when this candle, the next candle was forming over here, the trade setup had come in over here. So let's see how that was. So when the signal was pinged on Discord, this is how the setup looked like. There was a very clear break of market structure, and you can see the speed, the velocity with which this break of structure happened after interacting with the 3 candle fair value gap over here. And contrast this actually to the previous break of structure we saw in USDCAD, where it took like 4 candles with lots of back and forth movement. Here just like went up like a rocket, and this is what we want to see in a good setup. Anyways, nevertheless, I waited for another candle for it to tell me exactly where is the fair value gap and what is the range I'm working with. So when this candle completed, it gave me this fair value gap and this lower time frame order block and this as the range, which very quickly gave me, here was the 50% of that range, and I created a trade zone, and my anticipation was to take an entry here and take the exit here, where just before the liquidity gets hit here. So let's see how the trade played out. No entry yet. Okay, so we got triggered into an entry over here, and this was EURUSD plus, so there was fairly small spread. This was a very good clean entry here, and trade just completed right there after that. This candle got me an exit, and within within 45 minutes of getting an entry, I had an exit of 1.5 hour. For sure I could have held it to the moon or not. Yeah, it's my objective is always to bag the trade and move on to the next one, and do that repeatedly take as many winners as possible. So in effect, this was a good week. I took 5 trades, out of which 3 were winners of 1.5 hour each and 2 losses. So this week ended with a plus 2.5 hour. This is a 12-week challenge that I'm doing right now. Next week hopefully would be last, after which I would transition to a live account because my net R is positive. It looks small because I've recently started switching. I've switched to 0.5%, 0.5% as my volume because I'm doing more number of trades. So this 2.5 hour effectively meant that my net percentage increase on the account would be 1.25% because the effective volume I was trading with was 0.5. I found that 0.5% volume, 0.5% of your net account for the volume was a very good mental barrier or a mental threshold that would not create too much pain if I took series of losses back to back, and would give me enough mental room to take at least 5 to 6 trades in the week. So nevertheless, my objective is to achieve as much positive R as possible, and this week was pretty good. I was experimenting with a new way of taking a lower time frame entry, and just to show a sneak peek, I did a lot of backtesting this week, and the backtesting shows that the new way to take trades is much more improved, much more efficient, and I will definitely make a new video about how am I doing that and how you can replicate the same as well. So, well, thank you so much for watching, and catch you in the next one. Take care.